Hi everyone, Mike Flores here on behalf of iTradingU. Happy Mother's Day to all you mothers out there. We have here Australian dollar. What we're going to do is we're going to go through the charts for the week. We're going to look for all trade entry setups that we like. I have about 15 charts to go through, so let's start with the currencies. And I said here we have the Australian dollar. Looking here, we see the 55-day high here in black line. We have the 20-day high, this red line. Then we have the 50-day moving average and the 200-day moving average. So this is providing support to this market right now, along with the 20-day low. And what I'm looking for is a break of this 55-day high to get long. So the ADX is going up and turned blue, which is telling us that the trend is getting stronger. We're above 20, so we are trending. So on a break of this 55-day high, I will look to get long on that day, with my stop at the low of that breakout day. All right, let's look now at dollar CAD. Dollar CAD had a breakout on Thursday actually. We got short here. We talked about this market last week. We're below the 50-day moving average, but above the 200-day. We got short here, and our stop was this high. Notice here on Friday, we were actually stopped out. So what I'll look to do is re-enter on a break of this low, this new 55-day low. And why is that? That's because the ADX is still blue, which is telling me that the market is still in a downtrend. It's above 20. So if it breaks this low, I'll get short again with my stop at this day's high. All right, let's move on to Euro Yen. Looking at the Euro Yen market, we see here the ADX has turned blue. It's still below 20, so we're looking for a move here lower and to test the 55-day low, which will get the ADX higher and stronger. But I'll look to get short on the break of this 55-day low. We talked about this chart last week. Notice we have a mini head and shoulders. So here we have the shoulder. Here goes a head, and we have a shoulder that's kind of forming. That's not a perfect pattern, a perfect head and shoulders pattern, because you could say that this is the actual head, shoulder, shoulder. But either way, what I'm really looking at here is this support that we broke through. We broke through the 20-day low, and next we have the 55-day low. So break of this low, I'll get short with my stop at the high of that day, looking to retest the 200-day moving average, and I'll pyramid and get shorter. I'll add another full-size position if we break the 200-day moving average low and close below it. That's how I'm looking at this market. Right now, this 200-day moving average is providing serious support. We haven't been below that 200-day moving average in forever. Okay, so all the way in the back, all the way back here in 2012. So we'll be on the lookout for that market. Next, let's look at Euro dollar. Looking at Euro dollar, we had two really down days these past 2 days. Now, I've heard of some traders in the market that they've been buying on dips, they're calling it. This doesn't look like a dip to me. I mean, this is a clear something's going on here, right? The market's totally reversed here. We see that the ADX is going blue, which is saying that a trend is starting to form. It's not super strong yet, but these are two really big, strong down days. We closed on low here, and then we closed on low here. I would look for this market to resume lower. I don't like to catch falling knives. The issue here is if you buy on this market, where does your stop really go? You can say down here at this low or at the 55-day low. And at this point, I don't think that's a good place for me to put my money. So I really would only be watching this market at this point in time to see if it breaks a 55-day low to get short that. And then even more so, if it breaks a 200-day moving average, that really gives me confidence to get short this market. All right. Let's move on to dollar Mexico. Looking at the dollar Mexican market, we talked about this market last week as well. We're below the 50-day and 200-day moving average. We just broke through the 55-day low last week. Okay, so we got short here. We got stopped out. We can see the stop would have been this high. We would have gotten stopped out here. And again, this market as well, I would look to get short on a break of this low, with my stop at the high of the breakout day. And the reason why I'm doing that is the ADX is blue and still strong. we're below the 200-day moving average and the 50-day moving average, which is giving me key confidence that the market is in a downtrend right now. So we'll just play this market and see what happens. I want to move on to the softs now. And the first market we're going to look at is cocoa. Okay, looking at the cocoa market, we can see here that it's had the past few days has been very weak. Now, talking about this market last week, we were looking to get short on a break of the 55-day low. So you'd be short this market and still short it. And the ADX is now blue and getting stronger. So we would like to see this continue to gain momentum in the coming weeks, in the coming days. And really, again, here too, we would love to see it break through and close below the 200-day moving average to really get momentum on this position. All right, let's move to coffee. The coffee market is actually in a seasonal short period right now until the end of June. And we can see here we had a pennant formation that we talked about, or a triangle formation. And let me quickly just draw that line. And we broke through that. We cleanly broke through that this past week. All right. So we see we're now well below that market. And the first thing we're looking for is to go the distance of the width of the triangle. Now it looks like it's done that, but I don't see any reason to really get out of it. We've now broken below the 50-day low, the 50-day moving average low, and we're now flirting with the 20-day low has been broken as well. We're now flirting with the 55-day low and the 200-day moving average. So here, now that we've broken this low, I would look to stay short this unless it closes back above the 50-day moving average. That's the way I'm playing this market. So right now I'm just watching coffee short, and I'll just keep watching it. Let's look at sugar. The sugar market is another one that we were talking about last week. And we see here that sugar has broken a little bit lower. We're below the 55-day and the 200-day moving average. And I'm looking to just stay short this market and really just watching it from here on. You know, we'll watch it and see what occurs. There's really nothing to add to this market at the moment. Let's go over to the grains. Going over to the grains, we're first going to look at soybean meal. Soybean meal is in a long seasonal period going into June. We see here that we're actually above the 50-day moving average and the 200-day moving average. The ADX is getting weak. It's weak right now. It's not showing a real strong trend in the market, but we're flirting with this 55-day high here, this 20-day high here. So this is what I'm watching, and I would look to get long this. I probably wouldn't do a full size position here. I do half a size of position here just because the ADX isn't giving me strong confirmation, but I like the fact that it's in a seasonal bullish period. So that's going to make me take this trade if it breaks this high. You can use the low of the breakout bar. You can use trendline support as your stop if you like, or the low of the breakout bar. And that's what I'm watching there in the soybean meals. Let's go over to wheat. We talked about wheat last week. We looked to get long on a break of the 55-day high, which we did. The ADX has turned up, which is showing us that we're in a trending market. Friday was a very weak day in the wheat market, but it looks like we're still in this market if we use this low, and we are just barely. So if this market, if we do get stopped out, I would look to re-enter on a break of this 55-day high if it holds in. And we have the 50-day, we're above the 50-day moving average and the 200-day moving average, which is helping me believe that this market is in a bullish trend. Let's go on to energy. And in the energy market, let's look at crude. Looking at the crude market here, we can see that Friday we closed below the 50-day moving average, but we're still above the 200-day moving average. Now, there's a couple of things that could happen here. We see that currently the market's not trending. I'm going to trend this market. We see the market's going sideways, been going sideways for the past few weeks, months. But I noticed here, we can say we have a little shoulder here, we have a head forming here, and a mini shoulder here. So looking for a break somewhere around these levels, 97.80, 98.80, somewhere in that range, in that big figure range. If we get a close below the 200-day moving average, that'll give me some strong conviction that I want to be short this market. There was also talks on Thursday, I think, of there being a glutton of crude supply in the market at the moment. Again, I don't love fundamentals, but it plays into, I don't harp on fundamentals. I mean, fundamentals are important, but more important to me is what the actual price action is doing. So if the fundamentals support that, great. So in this case, if we get a break and close below the 200-day moving average, I'll get short. And, again, use the head and shoulders as a target, as a take profit for part of the position. And, or maybe put on a position and a half, half a position for the head and shoulders and a full position for the break of the 200-day moving average, or vice versa, whatever, tickles your fancy. But that's a good setup that I'm looking at here in the crude. Let's move to the indices. Let's first start with E-mini S&P. We talked about this market last week. We're looking to buy on a break of the 55-day high. Notice here that the market is not in a trending mode. It's going sideways. We said we would buy this one or YM, which is the Dow Jones Mini. And as we look at YM, we can see here that it just touched it, but we didn't break or close. We didn't close above our buffer and our entry level. So again, I'm watching this market. Again, the ADX is weak. It's not showing any trend here. We've been going sideways, but I will buy on a break of this high. I might stop at the low of the day, of the breakout day. We can see we're still in an uptrend here. I want to briefly look at the E-mini NASDAQ market. Now, this market is kind of neutral at the moment, right? We had a big move down, but now let's look at what we got here. I mean, we have a pennant formed here, and a pennant is a neutral pattern at the moment. We see here that there's a trend looking like it's trying to get stronger here. What that is will be defined by whether we break the high of this pennant or we break the low of this pennant. At the moment, we're in between the 50-day moving average and the 200-day moving average. Again, confirming that we're in a neutral pattern. So I'll look to buy on a break of the high with a stop at the low of the breakout bar, or sell on a break of the low with a stop at the high of the breakout bar. And then play that from there. And then I'd add to the position whether it breaks the 50-day moving average, which coincides with the high side. So actually, I'll leave that as one position. But if it breaks to the downside and then breaks the 200-day and closes below it, I'll definitely add to that position. All right. So that's what I'm watching there. Again, this I prefer. If it breaks to the downside, I'd be happier, because to the upside, I'll probably only do a half a size position because the other two equity markets, the E-mini S&P and the Dow Jones, are stronger. And I'd rather buy the stronger markets rather than this weaker market. Okay, let's move on to interest rates. So this is something that everyone's pretty much talking about in the market right now. The 10-year Treasury note has been rallying. The price has been rallying, but the stock markets, as we saw before, the E-mini S&P and the Dow Jones, are also rallying. And normally they have an inverse relationship. So people are wondering which one's going to break first, either the price of the Treasury notes or the stock market. Seeing how the stock market has had a longer bullish market than the average bull market over the past couple of years, people are guessing it's going to be that. But I don't like to guess. I like for the market to tell me what's going to happen. So I'm going to play this setup just like I see it. We're above the 50-day moving average and the 200-day moving average. We're in a bullish period. The ADX is starting to turn higher out for us. Again, not really above 20 yet, but still it's turning. So on a break of this 55-day high, I'll get long with a stop at the low of the day. All right. And basically that's it for now. I mean, these are the markets that I'm watching. Looking to trade for the week. If you guys have any questions, please feel free to add them in the comment section. Any comments, anything that you want to add, I highly, highly recommend that you put it in the comment field and I will respond. All right. Thank you so much. You guys have a great evening. On behalf of iTradingU, this is Mike Flores.